What's up, guys? Welcome back to the channel. Thanks for tuning in. Today in this video we're going to talk about Balancer, guys. In this video I'm going to break down a couple things going on Balancer, what they're looking to do, how they're changing the game. Let's go and get into it, guys, without further ado. If you guys are new to the channel, make sure you guys do three things for me: like, subscribe, bell button, leave a comment below in the description saying you subscribed. You'll automatically get thrown into that drawing to earn $100 and free BTC. Alright, guys, and if you guys did not know already, Balancer, dude, this is fire sauce right here. They launched on Polygon, and they have some serious liquidity mining incentives going on right now. Look at this, 109% APY. Dude, that's pretty fire sauce. Anyways, guys, we're going to show you guys how to provide liquidity and deposit into some of these pools, and we'll explain a lot of these numbers and what they mean. Me personally, in this video, I'm going to show you guys how to use the DPI, wrapped BTC, and wrapped Ethereum pool. I just want to try it, see what happens. But there is going to be a lot of slippage for the DPI token, guys. It is not a stable coin as well, so keep that in mind. In fact, let me show you guys DPI. Actually, it's not even going to show up on one edge probably. Oh, yeah, it is. All right, so look at this, guys. The slippage on DPI is like massive. It's like 40%. It's crazy. So the best place to go to get your DPI is going to be on Balancer. And we're going to go ahead and show you guys how to provide liquidity. And we're going to explain a couple things. So you have two options. You can do best price or you can do custom amounts. So custom amounts will allow you to put like the maximum amount you have of each of them. And I'm probably just going to do custom amounts and put in the deposit. Now, yes, the gas fee is going to be a bit high because there's going to be different swaps. You can choose to pay the amount or you can change the amount that you're going to pay. It's up to you what you want to do. And also keep in mind there is a price impact. So adding custom amounts causes the internal prices of the pool to change as if you were swapping tokens. So what they're going to do is swap what you have in one token for another and make sure it's even out: 33, 33, and 33. It's actually 33.33, but hey, it is what it is. Also, this is how you can get the best prices, buying the right amount of tokens for the best rates. But if you want to use the maximum amount, you can use this if you want to do that as well. We're just going to do the I'm going to do custom amounts because I just want to throw all of this into this pool because I don't want to hold any of my wallet. I just want to see what happens, guys. So again, this is not a stablecoin pool, so that's something to keep in mind as well. And I'm going to hit confirm and wait till the transaction goes through. So currently right now these swap fees are 1%. They are dynamic, so keep that in mind. So swap fees on every trade using this pool, dynamic swap fees, are controlled by the pool owner. So what's cool about Balancer is the rewards are automatically paid to your wallet. So this is airdropped. I believe it happens every Wednesday. So don't be nervous if you aren't getting any rewards or whatnot, but it is paid out into your wallet. So you'll automatically see your rewards accruing and it'll be increasing in value. So if you guys are curious, what is the best thing to do? Well, instead of just depositing each of the tokens, there is a option where you can just deposit, like for example this. If I want to just put in maximum amount of USDC, it'll automatically swap around and give me different tokens. So that's an option you can do as well if you just want to do that. But again, keep in mind the gas is going to be ridiculously high. Well, not ridiculous, but it is going to be higher if you're wanting to do something like that. Me personally, I'm not going to do something like that. I like being able to specify and pick what I want. And what's really cool about Balancer is they give you the different options. So they say, hey, look, if you would have just held it in your wallet, you would have earned 6.38%. However, if you would have deposited, you would have earned 7.51. What does this mean? Well, based in this scenario, it's better to have deposited your tokens. The impermanent loss was not as bad, but obviously this is not always the case, and right now we have the liquidity mining APY, and this is not the case for all of the pools. So like if you look at some of the pools, like this one has a low rewards, I'm going to assume that the hodl is probably going to be better. Oh no, it's just right on even. Then again, it's USDC, wrapped ETH, and Balancer. Let me select a more volatile. Well, I guess Matic does kind of follow ETH, but we'll still see what it is. Yeah, you can see the HODL is a little bit higher, 0.68% instead of the 0.58. And we can go to some other pools as well, for example, this one. And you can go into other pools and see what they are. All you got to do is load more. You can see the different pools that they have, see the different rewards, the different incentives they have, and so on, guys. I highly recommend you guys check out Balancer. It's a really neat protocol, and it helps with impermanent loss. So right now I have 33, 33, and 33. Why is this important? Well, if one of them goes to 0, I will be buying the dip, like not 0, but you know what I mean. Say the DeFi Pulse index. It's basically just like an index of all the DeFi tokens on the DeFi Pulse website. Just say, for example, they all go to, let's just call it 0. So what's going to happen is it's going to sell my Ethereum for DPI. So I'm basically going to buy some DPI with my Ethereum and my Bitcoin on the dip. So theoretically, I can't lose all of my ETH and Bitcoin. It's just going to lose about 16% of each of them. So I'll come out of this pool with a huge bag of DPI and a smaller bag of wrapped ETH and wrapped Bitcoin. So it helps with the impermanent loss. It's hard to understand, but the best thing you need to know is the more tokens in the pool, the less impermanent loss you will notice. Because obviously if the pools are weighted not as heavy in each token, then it won't be as noticeable. But anyways, you guys can see why the DPI one is paying a lot more, is because the pool barely has anything in it. And it's a volatile pool. So that's why it's also paying a high reward. So like the Bitcoin, USDC, and ETH, that one's currently paying 94%. That one is not as volatile, but again, you are playing around with a stable coin pair, so keep that in mind with impermanent loss. But again, that could be strategic, because if ETH and Bitcoin go down, you're technically going to be buying the dip. But hey, this is not financial advice. I'm just telling you guys different things. And here's another thing you guys want to see, that it's a really cool feature on Balancer, is you can select and say, hey, I just want to see all the USDC pairs. It'll pull up all the USDC pairs. You can say I just want to see the DAI, and it'll pull up all the DAI pairs. Well, they currently have no DAI pairs. Let's see what the sushi is. There's one sushi, and you guys can see, look, there's 13% in each of these, so it's going to spread out the risk pretty well, and it's paying $2.93, and it's giving the liquidity mining incentive, so that's pretty interesting. What I did find interesting, though, on Polygon is they started incentivizing the more volatile pools with the Matic incentive. I guess that's to get people into buying any of the other tokens besides stables, but I just noticed that recently. And if you guys need to like walk through all the steps again, they actually have the Balancer V2 article, so it explains it a bit. But first off, it shows you need to connect your wallet, pick the pool you're wanting to invest in, and you can filter by any token that you want, and you can select the amount you want to use. And it gives you a couple of options as well. For example, if you decide to only put some of the tokens only Balancer, then some of it will be exchanged to match the pool weights. So you don't have to go out and buy all these tokens. You can just be like, nah, bro, I just want to buy one token, swap it, pop it, and let it drop it. It's up to you what you want to do. And then you click to approve the tokens, allow them to go through. You can choose best price, custom amounts. It's up to you entirely. If you're trying to throw all the money that you have in your wallet into it and invest it in, then you would be best off using best price, not best price, custom amounts, because then you can max out each of the pools, or you can just do best price if you just want to get the best price. Then you also have the withdrawal tab. This is when you're finished with the pool, you withdraw, and it'll show you the tokens on your withdrawal. I'm just going to go ahead and show you guys this now so you guys can see how the withdrawal will work. Obviously, there will be some impermanent loss on this withdrawal, but basically I'll walk away with a bag of DPI, wrapped ETH, and wrapped Bitcoin. So that's something to keep in mind as well. You also, one thing that's cool is you don't have to withdraw 100%. So if you're trying to pay off like a loan or a liquidation, keep from liquidating, etc., you can select like a smaller amount if you want to do that. And again, the rewards will be airdropped to you, so that's something to keep in mind as well. And if you guys need to see some of the frequently asked questions, the best thing to do is go to Discord, and they will be coming out with more stuff as well, so keep that in mind. So here's the differences between V2 and V1. Well, first off, there's a 2 instead of a 1. So that's the biggest thing. But now they're on Polygon, so that's pretty awesome. They even have flash swaps, flash loans, improved gas efficiency, user balances like a personal wallet inside the vault, protocol vault for balancer pool assets. And you guys are curious what the user balances are. Well, if you go to here to the invest section, it gives the my M2 investments. So that kind of gives you like an overview of what you have into the pool. Also, they have the community governed protocol fees. So if you're curious about the fees on there, the trading fees are going to be on each of the pools, and they're different for each token. So for example, on the pool that I deposited into, the current swap fees are 1%. So that's a really high fee, hence why the APY is so high. They're trying to get the token for a better swap price. If you guys want to see how this works in action, let me just go ahead and show you guys how this looks. So I'm going to trade for DPI. So DPI is going to give me, we're going to do USDC just so it's even. We'll do 1, and it's going to give me 266 bucks. So now if we go to quick swap, we go to swap pop lop, and we just did something weird. All right, so then we're going to hit DPI. Well, it's not there. So DPI is not going to show up on QuickSwap, so we need to go and get this from CoinGecko. And as you guys can see, we'll paste the address here. Here comes DPI. I'll add it for you guys so you guys have it in the future. And if you guys see, we'll go ahead and do DPI again. Boom. We'll do 1. And as you guys can see, dude, you're basically getting raped. I mean, look, that's like 41% on the price impact. And that's what Balancer is looking to solve, is because they're going to be adding liquidity for tokens like this. That's what the incentive is for, and you're going to be paid for using or doing that. So obviously, the more AMMs and the more trading protocols that there are, they're definitely going to help with it as well. And I know you guys see this breakdown of the fees, and you're like, what the pants is this? Well, the liquidity mining APY is going to be paid with Matic and Balancer tokens, incentivizing people using the protocol, and the 24.73% is the APY paid in swap fees, and that's going to be paid in the tokens that you have. So it's basically just going to earn you more LP tokens. So that's something interesting to know as well. But yeah, guys, that's really Balancer in a nutshell. If you guys enjoyed this video, make sure you guys do 3 things. Like, subscribe, bell button, leave a comment below in the description saying you subscribed. You'll automatically get thrown into that drawing to earn $100 in free BTC. And guys, a couple things you guys need to know before we sign off. If you guys need the token address, this is going to be the token address on Ethereum. The best place to go for different token addresses is going to be on CoinGecko, and this little hash bar, or these 3 little dots, you click that and you can get different wallets or different token addresses on different chains. Another thing to keep in mind as well, I'm going to leave a link in the description below on what the APRs are of the rewards for these different pools. Obviously, the pool that I deposited into, I did think it was kind of too good to be true. I still deposited into it. It's still a good pool. I mean, it's paying 125%, so we'll see what happens. But this is where you can get the real APYs to see what's going on with it. But as you guys can see in these different pools, you can tell what the rewards are paid in. So this one's paid in Balancer, Matic, and, well, not Key. Key isn't paying out in it, but it's being paid out in Balancer and Matic. So Balancer, Matic, Balancer, Matic. This one's Balancer, Matic, and Key. And the reason why is probably because they have Key in this pool. But just so you guys can see what the rewards are paid in. And obviously, if none of these are paying out and it just has a percentage, what the percentage means is it's going to be paying you out in the LP token. Really, the use case of the token is just for voting, to keep that in mind. So really, the only way to have it is just having the token in your wallet to be able to vote. And yes, they do use oracles on Balancer, so that's something to keep in mind as well, and that's helping with the price. Let's go ahead and sign off, guys, leaving you guys with a wisdom one-liner. If you guys are curious the risks of Balancer, it's Yes, you still have impermanent loss, but it's not going to be as risky. And yes, you do have the risk of smart contract risk or price fluctuations, as in if one of the tokens goes to zero or one of them goes to a million. But hey, if ETH and Bitcoin, the pool, Bitcoin goes to a million, well, then I'll just have a huge bag of ETH and vice versa. Anyways, guys, Proverbs chapter 21, verses 12. The righteous one takes note of the house of the wicked and brings the wicked to ruin. Amen. Dogs, gotta say thanks to the patrons. Sean Bott, Da Man, Tariq Lou, TL King, JP, PJ, Bernito, Taco Nacho. Dogs, thanks for watching. Alright guys, if you want to catch me on TikTok, I do daily wisdom one-liners and let you guys see the pets and behind the scenes junk. So here it is, scan it, check it out, bomb bomb. Alright, so next off guys, if you guys want to support the channel and get paid to do it, you guys can check out Celsius. Celsius is fire, dude. So what's so cool about Celsius is, guys, first off, you can get $40 in free BTC using my referral link in the description below. Just deposit $100. Add in the code BTC50. You will also get an additional $50 if you deposit $400, guys. It's free BTC. Next is Voyager, guys. I also got a referral link in the description below. Instead of just only getting $25, you'll get $25 and some free VGX tokens, guys. Next is BlockFi. BlockFi is part of the quadruple threat. Go ahead and make a deposit. Use this referral link in the description below. You get $100. Depending on how much you deposit, you can get all the way up to, guess how much? $250. Alright, so what the pants is Celsius and BlockFi for? Well, you can use both of those as like your bank. They get some pretty nice juicy yields. And Voyager is more so like trading, and it gets some juicy yields as well. And the last one to try is crypto.com, guys. You can trade some like smaller altcoins, and you guys will get $25 in CRO once you guys get the Visa card. Why do I like the Visa card? Well, you can sell crypto and buy some junk with it. So I can buy a sandwich with my crypto. I don't use BTC, but I'll use like stable coins and junk. So anyways, if you guys want to support the channel, that's the quadruple threat. Thanks for tuning in, guys. You'll get paid to do it.